Good evening, everyone. Speaking on behalf of Cartrade Tech Limited, I'm Lalit Jaising from Concept PR and your moderator for this virtual brokers and analyst event. I would take this opportunity to thank you for taking out time from your busy schedules to join us. We appreciate your presence and extend a very warm welcome to all of you. The objective of today's live session is to understand Cartrade Tech's interest in raising finance via an initial public offering and what they do as a business organization. Under a normal circumstance, this would have been an on-ground event, but we all are getting accustomed to this as an increasingly more convenient format of attending and conducting the roadshow. We hope you gather the same or a better experience from the comfort in your office and home. Before I review the functionality of the webinar, I would like to bring to light that Cartrade Tech is a multi-channel auto platform which enables new and used automobile customer vehicle dealerships, vehicle OEMs, and other businesses to buy and sell their vehicles in a simple and efficient manner. With coverage and presence across vehicle types and value-added services, their platforms operate under several brands: Carvale, Cartrade, Shriram Automall, Bikewale, Cartrade Exchange, Adroit Auto, and Autobiz. The organization has a vision to create an automotive digital ecosystem which connects automobile customers, OEMs, dealers, banks, insurance companies, and other stakeholders. Moving ahead, you'll be kept on mute throughout the event and all questions will be answered via the Q&A chat box only, where you can type your question in session or at the end of the webinar. Would request all participants to please limit yourself to 3 questions if possible and use a lowercase font while typing the question. If we miss answering any of your questions, don't worry. You can email us at ipoteam@conceptpr.com and we will try to be swift in responding back to you. Going forward, it is a great pleasure to introduce our speakers today. From the company, we have Mr. Vinay Sanghi, Chairman, Managing Director, and CEO, Ms. Anisha Menon, Executive Director and Chief Financial Officer, Mr. Vikram Alva, Chief Strategy Officer of the group. The representation of the book running lead managers are Mr. Ashish Nigam, Executive Director, Axis Capital Limited, Mr. Govind Ketan, Associate Vice President, Kotak Mahindra Capital Company Limited, Mr. Sumit Sukramani, Executive Director, Nomura Financial Advisory and Securities India Private Limited, and Mr. Arvind Vashisht, Head of India Equity Capital Markets, Citigroup Global Markets India Private Limited. On behalf of the lead managers to the issue, let me thank all participants for being a part of this session. I now invite Mr. Arvind Vashisht from Citigroup to deliver the opening remark and commence this broker and analyst meet. Over to you, Arvind.
Thank you. Thanks a lot. Thanks a lot, Lalit. And ladies and gentlemen, on behalf of senior management of Cartrade Tech IPO and the book runners, a very warm welcome to the broker and for Cartrade Tech IPO. Lalit has, of course, introduced the company, but Cartrade is India's #1 car and two-wheeler auto portal in India with over 32 million average monthly unique visitors. Through a company's platform operate under several brands: Cartrade, Carvale, Shriram Automall, Bikewale, Cartrade Exchange, amongst others. Through these platforms, company enables new and used automobile customers, dealerships, and OEMs, amongst other customers, to buy and sell their vehicles in a simple and efficient manner. Cartrade is the only profitable automotive digital platform in India, and its equity story has been validated by world-class investors like Warburg Pincus, Temasek, JP Morgan, Mark Capital, which are already investors in the company. Lalit spoke about the presenters, but Mr. Vinay Sanghi, Chairman, MD, CEO, Anisha Menon, Executive Director and CFO, and Mr. Vikram Alva, Chief Strategy Officer, will be walking you through the presentation. Before I hand it over to Vinay, a brief offering summary below. The total offer size is up to 18.5 million shares, which represents 40.48% of the post-issue capital of the company. The IPO price band is 1585 to 1618 rupees per share. At that price range, the IPO size is roughly 2,940 to 3,000 crores. The IPO buckets are 50% QIBs, 35% retail, and 15% non-institutional investors. The IPO dates, the anchor is on the 6th of August, books open on 9th of August, and books close on 11th of August. With that, I'll pass it on to Vinay to run you through the presentation. And thanks again for joining the broker and analyst meet. Vinay, over to you.
Thank you, Mr. Vicious, for the introduction to Cartrade Tech Limited initial public offering and its key highlights. The way consumers purchase cars is changing, placing much higher importance on online and digital channels. Over 92% of the buyers of new and used cars research online. I would now request the company team to take us through the organization's journey, struggles, and victories. Subsequently, take the attendees through the company's investor presentation to cover its business and financial details, as well as touch upon its key strategies going forward. Over to you, Vinay, to take the attendees through how you grew Cartrade as a business, and then you can subsequently get into the investor presentation.
Sure. Lalit, and I just want to thank each one of you for taking this time out today, this evening, to learn about our story and our journey. It's been a very exciting, 10, 11, and I'm really happy to be sharing this with you today. Vikram, can we have the presentation? We're going to do a 10, 15-minute presentation. Then, of course, we can go into a Q&A to clarify all your questions and doubts. So really started out in 2010 with this very simple business idea. How do we help customers to buy or sell a vehicle, using the internet, or how do we simplify car buying for the Indian auto consumer? In 2010, we started with one side of our business where we are helping consumers like you and me sell cars. Big businesses sell vehicles to dealers. So it's like a C2B, B2B platform. There's a complete electronic exchange. As I said, sellers were consumers, and big businesses included, banks which had repossessed inventory, insurance companies, dealers, leasing companies, etc., etc. And buyers on the platform were the used car dealers of India and fleet owners. As I said, an electronic exchange focused on helping sellers and connecting them to buyers in the used car industry in India. Just to give you context, India sells approximately 4.5 million used cars a year and approximately 3 million new cars a year. So started with this and built it out over 2-3 years. And then in 2012, started thinking about the consumer side of the business. How do we help consumers like you and me buy a used car? And Cartrade.com got launched. I think along with Cartrade.com, we also launched Cartrade Exchange. Cartrade Exchange is a system we created so that dealers could log in and run their business using our software. It's like an ERP solution for used car dealers. And we did that because we felt that if dealers logged in and used our system to run their business, an inventory manager, a people manager, CRM tools, etc., we felt that we could connect with them real-time basis and make that inventory available for customers on Cartrade.com. So really by 2012, 2013, what we had done was, customers like you and me could come to Cartrade.com and sell a vehicle or buy a vehicle. Dealers could log into Cartrade Exchange, buy vehicles from a C2B, B2B platform, or push the inventory onto Cartrade.com to sell to consumers, or using our software, to run their business. So by we had connected all the dots of the used car ecosystem in India, and that's very, very rare. I think most companies in the world still have not managed to do that. But really by 2013-14, we built a technology platform which, as I said, connects all dots of the used car ecosystem. In 2015, we started thinking about the new car side of the business. And at that time, the leading new car marketplace was a platform called Carvale. And Carvale was not only the leading new, but also the leading used car competitor for us. And it was owned by a German publishing group called Axel Springer. After much discussion in early 2016, we acquired Carvale, all cash transaction from Axel Springer. And having acquired Carvale, we then had a B2C new car side, we had a B2C used car side, and we had this whole C2B, B2B online exchange. In 2016, we had great customer metrics, engagement scores, traffic, manufacturers, dealers, transactions, but we barely monetized, typical to an internet company really in 2016. And we said that if we do, and we believe that if we delivered so much value to our consumers or manufacturers or dealers, From 2016 onwards, monetization became a number one priority or goal for the organization. And from 2016, it grew rapidly. Revenues grew rapidly. But to our surprise, not only did revenue grow, but some of our leading costs, we have two main costs in the company, marketing and people costs. Because, Carvalho was our leading competitor. We acquired them. Some of our marketing costs came down and our brand got stronger and stronger. People costs came down. Need to do. And from a hugely loss-making company in 2016, we turned profitable by 2018. And that's when we started talking to, Shriram Transport Finance. You will all know that Shriram Transport Finance is one of India's leading auto financiers. STFC had created a 100% subsidiary called Shriram Automall. And this was created in 2010-11, primarily because they themselves repossessed vehicles and they created these automalls. And now there are 114 automalls in 90 cities. But they created the automalls so they could park their repossessed inventory and sell them in an online, offline manner. Over the years, they moved not only from their captive inventory, but to other sellers as well. In 2018, we acquired a majority in Shriram Automall from STFC. And the reason we did that is because we felt all our online customers would get physical facilities to keep their vehicles with us. And all their physical vehicles would get an online platform to sell. Would all our physical vehicles and all the vehicles sell. Automall, we had a B2C, a B2C, and a C2B, B2B, online, offline.
Either two-wheelers, CV, FEs, or cars, we have it all. With all the integration we've done over these years, we have beautifully married the whole online-offline presence onto our platform. As we speak, with 32 million average monthly unique visitors. These are not page views or sessions. These are actual unique visitors on the platform. Of the 32 million, 88% is organic. What we mean by that is, it's only for the balance 12% we need to pay for. The rest is organic. On the auction side, we have auctioned more than 800K vehicles in a year. In fact, if you look at the Q4 run rate of the financial year FY21, we have crossed the 1 million mark on the number of vehicles we auctioned. In FY21, we clocked a revenue of 2.8 billion, which gave us an adjusted EBITDA of 777 million and an adjusted EBITDA margin of 27.6%.
A lot of people ask, what exactly are we doing and what exactly are we going to focus on in the future? This is a slide which we made in this is a slide we made when we started the company way back. As we're building an automotive digital ecosystem. At the top of this ecosystem are consumer sellers and buyers. We get, as Anisha says, 32 million unique visitors every month on our platform. Also, what's more remarkable is the sellers and buyers of vehicles come, 88% of them come organically, which is when you combine 32 million and 88% is one of the reasons why we have this 27% EBITDA margin. So as I said, on the top is the platforms and the brand where all these 32 million customers come to sell or buy a vehicle. Also connected to this ecosystem are all other stakeholders through our technology and software. So as much as we're a brand, we're also a technology software company where dealers log in to sell vehicles, buy vehicles, OEMs sell vehicles, banks sell loans, sell vehicles, and fleet owners, leasing companies, insurance companies sell vehicles. So, we are a brand, but we're also a technology software company which connects all stakeholders. And many of these stakeholders, dealers, OEMs, use some part of our software or systems to run their business. As much as we're a brand and a technology software company, we're also one of the larger data houses for automotive data. We get, as I said, 32 million customers a month. So we obviously are one of the largest automotive data, customer data. We auction, Anisha says, 1 million vehicles a year. So we obviously are the largest vehicle data. And most dealers are on our platform buying and selling vehicles. So we obviously have a large amount of automobile dealer data. So as I said, we're building an automotive digital ecosystem. Our core strengths being the 32 million customers in the brand, the technology and software which integrates all stakeholders, and the data which resides in our servers. We can go to the next slide. If we look at the strengths of the company, the brand, the technology, software, and the data, and then we look at what we want to do over the next 10 to 15 years. Till now, in the last 5-10 minutes, we've already talked about the past. This slide talks a little bit about the future. And you look at the leftmost, the consumer group. There's a new car business, a used car business, where these 32 million customers come. As you know, these are for buying new vehicles or buying or selling used vehicles. But we also have India's largest two-wheeler platform called BikeWale. BikeWale is a fast-growing platform for us. As many of you will know, India is one of the largest two-wheeler markets in the world. And we believe that BikeWale could be a very large opportunity for us, going forward. And then in the consumer group, where these 32 million customers come, there's also the services side. Car servicing, car repairs, car insurance. It's not something we've addressed so far, but it's something we have our aspirations towards in the future. We will use investments or acquisitions to get into car servicing or insurance or repairs or accessories. And then the second block is the remarketing group, where we talked about auctioning at a run rate in the last quarter of 1 million vehicles a year. These are vehicles coming from consumers like you and me and big businesses. But the consumer group and the remarketing group make up almost all our revenues and profits today. The nature of the revenues are such that when we add revenue, they have high margins, as you can see from the 27% EBITDA margin itself. For the next 3-4 years, we believe, in the medium term, we believe there's a lot of juice left in growing the core new car, used car, remarketing business. And as I said, the nature of the revenues is such that, when revenue grows, EBITDA margins are strong. As I said, the next 3-4 years is really about growing the core new car, used car, remarketing business. But if you look at the company for the next 10-15 years, then the number of other areas for us as well. Franchising is something we believe in. We've already started putting our franchise stores across the country. I think the franchise stores are created because when you come onto Carvale to look for a car, find a car, select a car, we want you to be able to book the car, and then our franchise store will have it delivered to you. So it's a complete integration of the online and the offline world, providing customers which are very differentiated buying experience. And then there's car trade finance. Car trade finance is, all these customers who come to our platform need loans. As many of you know, the automotive loan process in India is quite a physical process. What we've done now, and it's already on our platform, is you can come to Carvale, you can select a car, you can find a car, you can then give your data, hit a credit bureau, take your data, take your credit score, give it to all the leading banks in India, and you can give an instant approval back already. This is something, again, we believe, it's going to be quite an opportunity for the future. As I said, we have 30 million customers a month, and many of them will need loans to buy vehicles. And then the software services side, right? Many of our stakeholders, manufacturers, dealers use our systems for running their business or part of their business. We obviously, with our tools, technology, want to go deeper into their processes. One of our customers, BMW, as in the RHP, has taken our product across Asia, and many BMW dealers in Asia now use our dealer management solution to run their business. And then the last part is the new emerging trends, leasing of vehicles, connected vehicles, right? Ownership sharing, especially electric vehicles. These are all spaces we're looking for investments and acquisitions. Look at us as a platform where, in the core next 3-4 years, our core businesses, new cars, used cars, remarketing will drive growth and profitability. But over a 10 to 15 year period, financing, insurance, franchising, repairs, software, emerging trends is something we want to get into. Obviously we'll use investments and acquisition to do it. If we're able to do that, then it'll give us just a limitless opportunity to grow over a very long period of time. Vikram, will take the next slide.
Yeah. So Vinay spoke to you about the businesses we are in, the businesses we are incubating, and the businesses we want to be into. The total revenue pool, or TAM as we know it, is about 14.3 billion. This is not GMV value, but this is the revenue pool available to us. This ranges from vehicle transactions, after sales, service, accessories, etc. Ad spends is a 1.8 billion opportunity. Auto finance is a 1.4 billion opportunity. The reason we can target this 14.3 billion revenue pool is because of the strong brands we've got and the huge amount of traffic they generate for us. Google Trends is a really good indicator of how our brands perform vis-a-vis our competitors. This graph is only for a year, but you can do this graph yourself for a 10-year spread and understand that our brands of Carvale and BikeWale are head and shoulders of our nearest competitors. In the B2C space, in the month of March, our nearest competitor had a score of 11 and our score is 75. So we're about 7 times stronger than the nearest competitor in the B2C space in cars. In the two-wheeler space, we're about 2.5 times stronger than the nearest competitor. The reason we've got such strong brand equity or brand affinity is because our brands are synonymous with trust, quality, reliability. Our UI, UX, AI, machine learning tools ensure that the customer is connected to the right stakeholder at the right point in time with the right information. Our strong brands generate 32 million unique visitors every month. 88% of that is organic. That means for 88% of our traffic, we don't spend a single rupee. This has helped us dramatically reduce our customer acquisition cost for the last few years. Our strong brands, large amount of traffic, most of it organic, is what is driving our business and brands forward.
As you can see here, the table to your right, it's an extract from the RHP. It's from the industry report, which is out there. This, since it's an industry report, it's based on information which is available in the public domain. This is based on the annual filing that every company needs to do with the ROC, which is why these are FY20 numbers. If you look at the FY20 number, Cartrade Tech earned a profit after tax of 31 crores and adjusted EBITDA about 72 crores. And in the exact same year, the competition has managed to burn 700 crores. On the income side, they're not very comparable. The revenue streams are very different. The way we account for revenue is different. We do not account for the GMV value of the car in our income, unlike the competition, which is why the industry report has managed to carve out the purchase value of such stock or the inventory from income and call it the adjusted revenue. Having said that, it's still not very comparable, but that's the best we got from the public domain. But coming back to Cartrade Tech, when we say we've earned this 31 crores of profit, it is not that it's earned from one segment of our business, which kind of compensates for losses in the other. The fact is we have built these sustainable model all throughout, be it new, used, or remarketing. We have created a business which is profitable in every segment that we have ventured out. It's probably because we've always focused on creating an ecosystem. If you recollect the slide that Vinay just showed, the ecosystem slide, a slide they built probably 8 to 10 years back, a vision they've believed in since then is to create an ecosystem to address every element of buying and selling journey of any automotive. Vikram, if you could help me with the next slide, please. I'm sure there's a question in a lot of people's mind as to how COVID impacted us or how COVID or how our year panned out in this year. If you look at Q1 and Q2, quite evident out here, it was impacted by the lockdown, which was dictated by COVID. But if you look at the Q4 numbers, not only did we bounce back, we actually surpassed all our previous numbers. Q4 for us were our ever highest numbers, both in terms of the monthly average unique visits and in terms of the number of vehicles we list for auction. Over to you, Vinay.
Thanks, Anisha. Thanks, Vikram. Lalit, we had a little bit of the past, a little bit of the future, and a few key metrics. Happy to go into Q&A session and clarify everyone's questions and doubts.
Thank you, Vinay, Anisha, and Vikram for taking us through the presentation. We hope the attendees have captured enough and more understanding of Cartrade Tech's business model, financials, and its execution capabilities across various channels and other diversification opportunities at hand. Before the floor is open for the participants to ask their questions, I would like to reiterate to type your name and organization details in the Q&A chat box for the moderator to take note and address your query. Note, in the interest of time, we will be restricting to 10 to 15 questions only, and repetitive questions will be skipped. There are quite a few questions coming in with respect to our revenue model. How do we make money?
Sure. So we, as I said in the presentation, we have a B2B platform where consumers like you and me can sell a vehicle. Big businesses like insurance companies, dealers, fleet owners, etc., can sell vehicles, and buyers are used car dealers or used vehicle dealers or fleet owners. It's an electronic exchange. It's an online transaction system where, of course, we charge commission and fees from buyers and sellers. So it's a high margin business for us, and that's one revenue source. The second revenue source is when people like you and me come to Carvale or our platforms to buy a vehicle or do all the research work, find out which car to buy, look at specifications, features, variants, photos, look at what other users think about the vehicle, expert reviews, etc. When they're doing all their work to decide which car to buy, we charge or we monetize manufacturers for advertising revenue or contextual advertising, as we say. And if there's an intent to buy, then we monetize dealers for lead generation. So really the C2B, B2B commission and transaction fees on one side, and on the other B2C side, it's the advertising revenues and the dealer lead generation fees as the two revenue pools which we have. Both are reasonably high, both are profitable businesses for us and reasonably high margins.
Okay, sir. Next question, being that you help arranging for finance also, when it comes to vehicle finance for your buyers, is there any kind of commission you earn out of it at the given moment?
Currently, for all our customers, it's completely free. It's a product we're as we're trying to solve a pain point of helping customers get a loan in a seamless, simple, easy manner. All these 30 million customers which want to not only buy a vehicle, but of course need a loan for a used car, new car, two-wheeler, etc. And of course, we've deeply integrated with many, many banks to make sure it's seamlessly available instantly with deep technology integration, building business rule engines, electronic algorithms for these banks and showcasing them to customers so that we can seamlessly make it available to all of us. It's completely free for consumers at this point.
So any chances of this getting monetized?
Obviously there are opportunities to monetize this in the future. The RHP doesn't allow me to spell out how and when, but of course, there's an opportunity there.
Okay, so there's a question which asks that how many similar platforms are already operating, like you in this market? How many more are expected to enter the market, in a similar line? And you could also reiterate, how different are you from the existing service providers who are there?
Sure. Where we are different first is we're building an automotive digital ecosystem. So if you're looking to buy a car on our platform, a new car or used car, first of all, we cater to both. You can come on a platform, find your car, select a car, get a loan, sell your old car simultaneously, book a car. So we're a complete integrated play. Most of our competitors, the online competitors at least, are one-dimensional or tend to be one-dimensional. They do one side of this business, which is they don't equally or focus on both helping customers buy cars and helping customers sell vehicles. We do both. And not only that, we also bring other aspects of the ecosystem like financing and all other things. So as I said, we're a C2B, B2B platform on one side and a B2C consumer platform on the other side, which is where we're different, we're an integrated ecosystem play. And as I said, many of our competitors are one-dimensional. And I think Anisha talked to me in the financials as well. That's one of the reasons why in a year where we are highly profitable with high margins, most of our competitors, or almost all our competitors, are losing or having heavy losses. That's one. I think the other part which differentiates, and Vikram talked a little bit about that, is just the brand affinity, right? I think when you look at Google Trends and you see the number, you look at the numbers and you say 11:75, it shows the difference between various platforms. So that's another differentiation. Our traffic over the last, the RHP shows the traffic over the last 2 to 3 years has grown. And not only has the overall traffic grown to 32 million in the last quarter, but also our organic traffic. Organic is free traffic. 88% is a very high number. It's also grown in percentage terms and absolute terms. And this is when a lot of our competitors have spent money, as you can see in the financials which are shown to you. So yeah, we believe that our focus is really on building value for all our consumers. How do we make it easier and simpler for each one of you to sell a car or buy a car? Make sure you get the best price. Make sure you get it, in a minute, a loan in a minute, or provide all the products and services which our customers want. And if we're able to do that, then we'll always stay ahead from competition, online or offline competition.
Sir, in addition to the revenue model point that you've already reiterated and spoken on, is there any seasonality there?
Anisha, you want to take that up?
Sure, Vinay. So there is slight bit of seasonality, which is more towards the festive seasons, which is around October and November. But typically, we do not see any major spikes. Our quarter on quarter are generally better than the previous quarter. But overall, we don't have huge spikes in our business at any point in time. There is marginal increase at the time of the festive season, which is October, November, December.
Okay, and given the trajectory of where you've been receiving your revenue stream from, going forward, do you think that commissions will be the largest, bucket, or is advertising also, going to play a bigger role in the coming term?
We are excited about all our businesses, whether it's advertising, whether it's commission and fees or transactions. Just to give you context, Indian automotive advertising is approximately $1.8 billion a year. About 12 or 13% as per the industry report is online. A large part of it is offline. So obviously that is going to migrate to digital spends, and that's going to come to us. So we're as much big believers in advertising or automotive advertising or digital advertising as we are in commission and transactions, on our C2B, B2B platform. For us, there's a lot of headroom to grow in all our businesses.
Sir, your portal is only used, selling used cars, or does it also, sell new cars?
Oh, no, of course, it's new and used cars. It's all cars, right? So new cars are a very big part of our business, as you can see. And, users of Carwale will know that. So you can come on our platform, you can find, or you can choose between which new car you want to buy. You can decide why you want to choose a particular new car. You can, just as I said, you can see what other users think about that car. You can see what experts think about that car. You can, of course, look at videos, photographs, consume as much information as you want to make up your mind which new car to buy. Or if you want to buy a used car, then there's a used selection of used cars which you can select from as well.
Okay, sir. And from a revenue percentage standpoint of view, from sale of used cars, what is our revenue percentage?
Unfortunately, the RHP doesn't bifurcate new and used cars or revenue from new and used cars. As I said, they're all critical areas of revenues for us, but it doesn't clearly bifurcate it.
Okay, sir. There's a question which asks that your revenue has come down in FY21 to 281 crores from 318 crores in FY20, but your profit has gone up to 101 crores from 31 crores in the same period. Could you explain how this has happened?
So I'll explain the revenue, and Anisha, you can explain the profit, I think. The revenues, as you know, and you see the metrics of the company, April, June was in India was a complete lockdown last year. The industry was at standstill. And as you can see from all the metrics in the RHP, April, June last year, whether it's traffic on our site, whether it's a number of vehicles we auction or listed for auction, they grew rapidly in July to September, and then became all-time high numbers in October to December and January to March for us as a company. So you've seen steady growth there. Obviously, last year on a volume term was affected because one quarter was under India was under lockdown. All of us were locked down as well. So that's the reason why the profits, of course, jumped up, partly because our brand traffic has gone up, and our cost is showing the brand affinity of the company, and therefore the profits are shot up. But also, I need to explain the tax-deferred tax.
Sure. So, Lalit, just to answer the profit question, what would be comparable would be to see them shift from 53 crores to 71 crores and not from 25 to 100 crores. Because in that, from 25 to 100 crores, there's a 54 crore of the deferred tax impact, which Vinay just spoke about. The deferred tax impact is on account of all the brought forward losses that we've had in the past. We've accounted for the deferred tax in this year, which will allow us the tax shelter in the future years. So we will not be paying tax till we unwind the deferred tax impact. Does that answer your question? Yeah.
Okay. Considering that your organic visitor base to your website has seen growth from 64% in FY19 to 88% as on June 30th, 2021 on a monthly basis, how much of this traffic converts into sales, and is there any kind of industry standard?
The way we look at it, at the top of the funnel, 32 million customers come. All of them do research on which car to buy, or from whom to buy, what price to pay. Some of them, put an intent to buy to our dealers. Some of them buy. There's a whole funnel there. Some of them take a loan. 32 is the top of the funnel, and the question of yours is at the bottom of the funnel. For us, that funnel is something we track very closely in the company. Of course, the RHP doesn't give those metrics. It gives only the key metrics of the company, which are the 32 million customers and the 814,000 vehicles auction.
So what is the proportion of business from Shriram Automall's offline auctions?
Shriram Automall is and Cardiac Exchange is an online-offline platform. So 814, as I said, 814,000 vehicles are online offline auction for Shriram Automall and our online business. It's an offline-online business now. When we acquired it in 2018, and since then we've converted to online offline business. So.
Okay, so from a just move to the next question. Is the company receiving any money from the net proceeds?
No, Anisha, want to answer the question?
Yes, it's 100% OFS level. There is no primary funding that we're doing in this round of IPO.
And there are questions which ask that, why the issue is only an OFS, and that too for a 40% stake.
Sure. I'll take that on, Anisha. We are, as I said, a profitable company, number one, generating cash. Number two, if you see the cash and cash equivalents in the RHP and on a balance sheet, you know they're very significant. So obviously the money we generate and the money we have is going to be used for future acquisitions and investments. And we don't need to raise any primary at this point. and therefore it's an OFS.
A question which asks that what are the factors that our company has an advantage over the competitors?
Many advantages. I think the biggest advantage we talked about is the fact that we are an ecosystem play. You can, as a customer, come to buy a new car or a used car or sell your car all on one platform. That itself is a huge advantage. The other big advantage is the brand affinity. Vikram talked about the brand affinity in the slide, showing 11:75 with the nearest B2C competitor. The third advantage is the network effects itself. Platforms like this have a certain network effects, which means more buyers bring more sellers bring more buyers, and then they feed off each other. And it's very hard for anyone to break into it, which is typical to any internet company or consumer internet company anywhere in the world. And the fourth is the technology and software which we have, which is used by all our stakeholders on our platform and also in their businesses. And of course, fifth is the data, right? The data science, the ability of ours to analyze all the data we have in our servers and provide it back to our customers so that they can make more educated decisions in buying or selling of a vehicle or their process. So number of advantages and number of modes in our business, we believe. But on the other hand, Lalit, we also believe that we've got to keep working hard at it. Whether it is building more and more innovative products for our customers like loans today or something else tomorrow. So that in this ownership cycle of owning a car or buying a car or selling a vehicle or using a vehicle, we are able to cater to all the needs of our customer. So that's what our product and tech teams do every day. They work hard on innovation so that our customers get the best products and services.
So there's a question which asks us, what is the logic of keeping different websites? Cartrade, Carwale, Bikewale, there's a question which asks that why keep different websites?
Vikram, you want to take that on?
I think so. When we looked at it, we thought different consumers or different kind of customers need different kind of user experiences, right? So therefore, the ability for us to cater to different customer needs is helped by multiple brands which we've got. Also, some brands have stronger affinity to a particular customer base. So some customers are loyal to, let's say, Carwale, and some customers are loyal to, let's say, Cartrade.com. Therefore, to keep customer preference, UI, UX is the key reason that we kept different brands within our portfolio. This helps us address the customer needs much better than having only a single brand.
I think the one obvious one, also the answer is that Bikewale is, of course, because it's a two-wheeler brand, and Carwale is a Carwale brand. So that's also the reason for the difference in the platforms.
Okay, so there's a question which asks that shall we expect the deferred tax credit in the upcoming fiscal also? Could you please explain about this deferred tax credit?
Sure, no. So the deferred tax is resulted out of the brought forward losses that we've had in the past. We do not see a deferred tax entry in the, again, I can't give you a future projection, but the similar kind, whatever brought forward losses were there, we've accounted for in this year. So on account of these losses, we would not have any deferred tax credit coming in the future.
Moving on to the next question, do you take on any inventory risk or is it purely a marketplace model? Going forward, is this expected to change?
So we have a C2B, B2B platform where consumers like you and me can sell a vehicle, and big businesses can sell, and buyers are the used car dealers or fleet owners in India. We're a marketplace, which means consumers and big businesses list, dealers buy, or fleet owners buy. The price benefit of the highest price goes to the seller of the vehicle, and we don't take a position or we don't buy the vehicle and keep inventory. And that's one of the reasons why we are asset light, and we also, our margin structure is what it is. So we don't do that in our C2B, B2B business at this point. I don't want to give any guidance to the future, but at this point, we don't think it's necessary because our value proposition to the seller is to get the best price. So we just feel that it's better that the buyer bids for a seller's vehicle directly.
Okay, so what is the total addressable market for online automotive portals in India as of now?
So we had shown the time. Vikram, you want to take that up?
I think we had shown that, part of my presentation had the TAM slide. It is about 14.3 billion divided into different pools like transactions, ad sales, ad revenue, auto finance revenue, insurance revenue, sales, service accessories. If you put it all together, the total TAM becomes about 14.3 billion. And that's a addressable pool for any online platform out there.
Okay, moving through the next question. It states that many of your peers are opening physical stores or franchisees. Why will online platforms like yours with limited physical presence do more transactions than these peers?
The way we think about this is that if you're coming to buy a vehicle on a platform, our role is bringing you on, making sure you get the right information to find the car of your choice or select the car of your choice, book the car, get a loan, get all the value-added services you need. But we do believe after you book the vehicle, the delivery process, the holding of the inventory or the delivery process is best done by manufacturers, used car dealers or new car dealers or our franchise stores. And therefore, dealers are our partners, manufacturers are our partners and our customers. We just believe that they do that better than we do. Our skills are really in building products, for consumers like you and me to come so that they can find something of their choice, select it, book it, and then build the best technology so you can get all the other, value-added services instantly. But we want to make sure that, or we would like our partners and which are manufacturers and dealers to really do the inventory and the delivery of that vehicle to you.
Moving on to the next question. Who is the promoter of the company? Who decides daily activities and who calls the shots for new acquisitions or any other critical business activity decisions?
So like any company, there's an investor, there are the investors and shareholders, which are at the highest level. And there's a board. The companies are a 50% independent board. Anisha is, an executive director on the board. As you know, I'm the chairman and the MD of the company. And of course, then our business is run by independent profit center heads or CEOs, as we call. And then all our other employee partners, right, who every day work hard to build the best products for consumers. So that's how the hierarchy of the company runs. Obviously, the decision making of the companies is at all employee level, but also at the board level, and of course, as an MD of the company, I have responsibility to that as well. The other thing we like to do is, we have an entrepreneurial culture. So we like to see that all our employees have enough independence to grow each of their areas independently. And that's the culture we like to, work with.
So besides passenger vehicles, do your platforms also, sell commercial vehicles, both new and used?
We as Anisha talked in the presentation, multi-vehicle platform. That's also where we're different from everybody else. There are, of course, passenger cars is a very significant part of our business, but there are also commercial vehicles. That is correct. And we're very excited. Let me just add, we're very excited with the commercial vehicle space. The industry report in the RHP talks about the used commercial vehicle market being about 1.5 million vehicles. Am I right, Vikram? 1.5 million vehicles a year. And we're excited about that space too. So it's something we are focused on as well.
So EBITDA margins have substantially grown over the past few years. Are these margins keeping in mind the trajectory sustainable?
Anisha, you want to take that on?
Sure, Vinay. So our revenue models or models across all the business that we have is a model in which every penny that you add to the revenue is now going to be added to the EBITDA. For obvious reasons, two of our major costs are payroll and marketing. Marketing, as you've seen, and a slide that Vikram had spoken about, the brand affinity is so high that over these years, though our traffic has increased substantially, the marketing costs have actually gone down. I mean, they're like drastically reduced. It's the element of how much is coming to you organically and how much do you need to pay for. So the increase in traffic did not result in any increase in the marketing spends. Rather, the marketing spend just went down over these years. Similarly, on payroll, on the payroll cost, again, it's a cost which does not go or does not increase proportionally to revenue. For every incremental revenue, we do not have to hire like really large number of employees either. So our model is kind of simple, and I'm sure you've understood in the model till now, it's a very asset-light kind of a model. So incremental revenues are just adding to the EBITDA, which is why the margins are increasing over these years.
Thank you, sir. Moving ahead with the next question, what will be the implied market cap on the upper price band, and what is the basis of the price band?
Anisha, you want to take that on?
Sorry, I didn't get the whole question, Lalit. What is the?
What will be the implied market cap on the upper side of the price band, and what is the basis of the price band?
So on the high side, the market cap would be 7,400, and 7,400. And the rationale of the price band, I think, I don't know if I can comment out here on the rationale on the price band when I don't know. it's more
Yeah. But maybe, this is something, maybe it's something the bankers need to answer. And
it's advice that the bankers
Ashish on the spot
that we
and ask. Yeah.
No, maybe I can comment. So, the basis of the price band essentially is where the book is being built. As you know, most internet companies are valued in a particular way by institutional investors. They look at the intrinsic value of the company. They forecast, the future growth based on some metrics they apply. They've clearly seen Cartrade as a very strong franchise in this space, and they're the only profitable company in this space. And that's a value at which they have been very comfortable, bidding for the IPO. And we can say, and you'll see it soon, that there's been tremendous investor interest at this level of the price band. I'd also like to congratulate and thank, Vinay and team and the shareholders for also, sort of leaving enough on the table for all investors to make money.
Thank you, sir. There's another question that's come in asking that, the auto business is a cyclical one. During downturns, how will you manage to maintain your growth if demand for CVs and PVs and bikes go down?
The way we think about our business is we're creating a digital, as we said, an automotive digital ecosystem. And many of you know the car industry over the last 5 years. The growth rates are very, very low, or if none, or probably none in the new car industry over the last 5 years. You've seen our growth rates in the last 5 years. So really, as a founder of the company and as management of the company, we believe that we would like to look at what the controllable is. Our controllables are that we build great products for our customers. A large part of the industry is at very early stage of digitization. A large part is offline. Most of it, or a large part, over time will move from offline to online. That's a big, driver for us and a big, metric for us. Our focus has always been on what's controllable in the company, which is building great quality products and services for our consumers, for dealers, for manufacturers. Hopefully, India is going to go through a growth phase in the next few years, and with GDP growth rates, the automotive industry is going to grow. And you got to keep one thing in mind: India is still 22 cars per 1,000 people. The penetration is extremely low. So most of us, all of you on the call and me, we all believe that the auto industry in India is going to grow. But as I said, it's not a controllable for us. We can only focus on building great quality products and services for our customers, making sure that whether it's buying a car, selling a car, buying a new car, used car, getting a loan, every area we can, focus on and make sure our customer gets the best of all the services, the products and services we can offer.
All under one roof. Thank you, sir. Given that, we've answered most of the questions. If there are any unanswered questions, definitely we will get back, to the person who's asked it. Thank you, everyone, for showing interest in knowing more about the company, its leadership and future potential. I would now like to call upon Mr. Govind Ketan from Kotak Mahindra Capital Company Limited to make the closing speech before we end today's webinar.
Thanks, Lalit. Hope I am audible. So thank you everyone once again on behalf of the Cartrade team and the book runners for joining this session. We hope you will share this insightful and unique story to all your readers and subscribers. Before we all sign off, we wanted to summarize the issue details once again. IPO size is around 3,000 crores. Price band is 1585 to 1618 rupees per share. Lot size is 9 shares. IPO will be open for subscription on 9th August, Monday, and will close on 11th August, Wednesday. Anchor book will be announced on August 6th, Friday. Thank you once again for patiently hearing us out. Thank you, everyone.
Thank you, Mr. Ketan. Esteemed audience, we've now come to the end of the webinar, and we look forward to your participation and support on making this initial public offering a great success. Wishing you all a great day and keep safe.
Thank you, everybody.
Thank you so much.
Thank you, everyone. Thanks, Lalit.
Thank you.